entrepreneurship has always been the way.
Investing is important because it's the only way you are going to be able to get rich and wealthy for your family. We can close the wealth gap by working together.
Market Monday is the biggest investment show ever.
My life has literally changed since watching EYL.
When you can make people money and you can add value, they're going to be forever indebted to you.
And I promise you this year, I'm going to make y'all even more money.
Yeah.
Happy Monday.
Yeah.
What we doing?
Yeah. What's up, though?
We are back. We are live in the flesh.
We're here, man. Happy Monday. Happy Monday. Happy Monday. It is the 8th of December.
Yes.
It's a chilly time. Chilly time, man.
I heard I want to visit so bad, but the Arctic blast.
Yeah, it's a little chilly. Hey, Ian, I didn't text this to you. I didn't call you. All right. I wanted to publicly say this so everybody can hear it. Congratulations to your Indiana Hoosiers. Number one team in the country, probably will have a Heisman Trophy winner.
Let's go.
Yeah.
Coach said, Google me. I'll win. Google me.
Yeah.
Yes, sir.
Hold on. Make sure your mic's good.
Yeah, no, I got you.
Thank you.
Now,
There we go. Shot. Mic check 1, 2.
They wanted to sabotage us. They can't sabotage us. I'm gonna say it again. Congratulations to your Hoosiers.
Thank
Number
you.
one team in the country, Big Ten champions, number one in the CFP, and probably will have the Heisman. So happy times in Hoosier land.
Boy,
I thought of you. I said I'm not gonna text you. I wanted to publicly congratulate you.
I appreciate it. Back up the Brinks truck. Give them another $100 million. Shout out to the boosters too.
Shout out to the boosters. Shout out to the boosters.
Are you a booster?
Allegedly.
NIL.
Somebody call him.
NIL collector. You got the
Real
Indiana merch on.
For sure.
See, you know what I mean? I knew I
know what time it was.
You subtly did it, but I knew you would. So congratulations. Got the bye week, so we'll see what happens, man. My boys did not get in, but it's okay.
It's okay. First time since 67. 6-7. Once again. Let's make the most of it.
That's a fact. That's a fact. 30 losses in a row to Ohio State, but that is now over.
Yo.
That's over. That's all over.
Yeah.
Indiana. Shout out to Indiana, man. Yeah, we back. We do have the ticker.
It's there.
Thank you to Mike for making that happen.
Thank you, my brother.
And thank you to the audience for asking for it 2 weeks ago. You asked and you shall receive. So 2 weeks ago it was requested. Said that we was gonna have it by last week, but we got it this week.
Yeah.
So we do listen to feedback. And we do take requests. We do, that's important. Customer service is important. So
Indeed.
You ask for it,
you
got
may
it.
get it. Yep.
That's a fact, man. The customer's always right. So we appreciate that. That's how you make better performance, right? You listen to your audience. You listen to your audience. A valuable
You have
lesson.
to.
We sat down with a prestigious CEO, and he's very, very intuitive about listening to his audience. And so we're listening to ours, man.
So we got a few things going on this week. Blackout, we back Wednesday, 10 o'clock Eastern Standard Time. Tap in. It's gonna be a good one. We got a lot to talk about. And then Thursday, we back with a big EYO episode, 6 o'clock. We got Vlad Tenev, CEO, arguably entrepreneur of the year.
Probably.
He's in the conversation.
Stock is up 263% for the year. Turned around the ship. Robinhood, CEO of Robinhood. He's arguably the CEO of the year. He did
a great job.
He's in the conversation.
$14 billion net worth.
He is. You know what he said? He said, this is like the fourth time we sat down. Every time I sit down with you guys, a few weeks after, the stock just starts to run. I said, I hope you notice the pattern here.
Thank you.
I hope you notice the pattern.
Preferred chairs, please.
Please.
On the wake up.
Please. Good dude, though. Good dude.
Shout out to Vlad, man. We went to the Robinhood office in New York, and man, just a good dude. Shout out to the whole team. And yeah, this is a lot. We've done a lot of stuff with him now. We interviewed him in Silicon Valley, went to Miami.
Yep.
He came on Market Mondays. Now we did the EYL episode again, the follow-up EYL episode. And like I said, this is somebody who might be the CEO of the year. So
And brought quant-like strategies to retail traders at a time when retail traders were not appreciated. And that's a lesson in that. I'm sure you guys will talk about it. But going to blue oceans that are untapped and giving them professional-like tools to get an edge, and it's worked incredibly for the stock. So
yeah, he took an approach where everybody was kind of discounting, right? He wasn't looking at institution as the only way to broaden your customer base. He looked at the retail investors and said, look, they are sophisticated investors. In fact, I'm going to give them sophisticated tools. When people said that Robinhood was a joke, he said, all right, no, let me give them some tools. He puts out Robinhood Legend. And now you want to talk about sophisticated. I mean, these are above average investors, and they're reaping the benefits of it right now. And he's, he sits in the seat of two different like ecosystems, right? Like cryptocurrency, which has helped obviously the stock, but he also sits in the equity side when he's watching companies from a brokerage standpoint. So he's unique, man. A really smart dude.
So shout out to that whole episode. Shout out to Aquaman.
Yo,
episode. Sure. Great episode.
We are not related. Just because we're not related. Somebody put a meme with me, and I'm like, no, we're not related.
Very viral, a lot of his takes. So check that out if you haven't checked it out. Shout out to my brother Jim Jones.
Yeah.
Shout out to Capo. Outlier.
The Outlier. Outlier, the album is on the way.
The Outlier album.
The LP is on its way.
Calling me a liar? I said Jim.
But you know what I liked about that, man? He was humble enough to just ask in the moment. Because some people would act like they knew what the word was and tried to finesse it. Never be above learning. There's a lot of things that we don't know.
We don't know. Yep. Learn every day.
That was a real moment. It was not edited. That was real. So that makes it dope. And anybody that wants to do hip hop karaoke with me, I'm willing to take any challenge. I'm with it.
So salute to Jim. Yeah.
I'm with all of it.
So check
good moment in conflict resolution too.
Yeah, that's our guy. That's our guy.
Shout out to your diplomat. No pun intended.
That's our guy.
No, yeah, Jim a good dude.
That's a fact. But yeah, check that out on Artist to Artist. Shout out to Jim Jones. We got some other announcements that we'll be saying later on in the show. Shout out to everybody that took advantage of the deals. We'll talk about that later on as far as what to expect and the onboarding process. But I don't want to hold it up too long. We got a guest. Ian, any announcements?
Yes, we had an amazing stock club call yesterday. Replay will be out Wednesday at 9 p.m. Central. If I made you money, please put yes in chat. This week's call will be Sunday again at 9 p.m. Central. Kudos to everybody who joined, like you said, in the deal. And the first day of the trading tournament was absolutely amazing. We'll talk about that a little bit later. But a couple of y'all ran up the leaderboard today. I'm proud of you. And if you haven't joined, you have an opportunity to join later. So let's have an amazing show.
Yeah, shout out to Jason. He hit me up this week. We're going to be sitting down with him on Thursday. Get his brokerage account going, man. Shout out to the whole movement. Good dude, man. I love those stories. I love when kids from the Bronx turn into young men that do some crazy things. Shout out to him. And real quick, we got to give an important birthday shout out to somebody that is super, super valuable to everything here at Earn Your Leisure. Definitely at Earn Your Leisure University. It was Magda's birthday Friday. Yes. Happy birthday, Magda.
Happy birthday.
If you've been to InvestFast, if you've been to EYLU, you already know who Magda is. Just an incredible human being outside of everything. But we just want to give you a special happy birthday shout out. Hopefully you had a birthday weekend. I spoke to her earlier. She was a little under the weather, so feel better, Magda. Love is love.
Yeah, happy birthday, belated birthday to my brother Pierre, Red Panda Gang. Love you dearly. One of the most solid brothers I ever met. I appreciate you. Let's run it up this year. And
all right. Y'all know how this works, man. Let's get to this disclaimer. Our content is intended to be used and must be used for informational purposes only. It's very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our show and which to rely upon, whether for the purpose of making an investment decision or otherwise. Do the research, share the research. Good research can open the keys to doors that can change your family's trajectory. Shout out to everybody that's doing that and breaking down the walls that will put up, man. We got to build wealth, build our communities, build our brokerage accounts. Let's do it together.
Hot take, better executive year, Tim Cook or Vlad Tenev? Just 1 year.
Let's get into
this year.
Who had the best year as far as Tim Cook versus Vlad? I think when you look at Tim Cook, you look at somebody that has weathered the storm, has Apple stock at an all-time high. I think it's up over 25% for the year.
I'll get the number.
One of the most important companies in the world. had the new iPhone release, and I think that it went well. Rolled out a few different features, even with the translator thing. We used that when we did a video of that when we were in Africa.
Yeah.
When people were speaking French. So I think Tim Cook has had a stellar year, but I think that Vlad Tenev had a better year because anytime your stock goes up 263%,
you cannot argue with that.
That's crazy. And then as far as the transformational direction that Robinhood is really, positioning themselves to become the real leaders of the new school when it comes to brokerage accounts, doing things non-traditional. Now they're talking about rolling out opportunities for people to invest in private companies.
Yes.
IPO investing. When you
If they
talk about
democratize that, it's game over.
Prediction markets, sports. He didn't say sports gambling, sports betting. He said sports
predictive markets.
Predictive markets.
Predictive markets. We got language important.
No, but he had a special language for sports. But
waging.
Sports waging.
Sports waging.
Sports waging. So I mean,
language is important.
Shout out to a good legal team too.
The comps team.
Sure.
And then crypto, and then what they've been able to do on the crypto side, really revolutionized. A lot of people say like, "Oh, well, you don't technically own your crypto when you invest in Robin," but they just made it easier for a lot of people to get into investing, and they're extremely popular, especially among young people. And it's not a fad. I think some people thought it might have been a fad because he was saying even when we interviewed him, the first time we met him, they were in trouble. Coming off of that whole GameStop situation.
GameStocks, yep.
The stock was down bad. And he was like, look, since then the stock is up like 500%. It's up 263% just this 1 year, but since then it's been up like over 450%.
His demeanor has changed as well. I remember
the
first time we met him in Palo Alto, it was a totally different experience. It was security everywhere. He was kind of subdued. When you look at him now, very relaxed. And also about a piece that was written about him, and he made a conscious effort to be more relaxed, to say, you know what, I'm going after the things I believe in because I trust them and I know that they're right. It's not even about trying to please everyone. It's about trying to cater to what everybody thinks that they should have. And he's looking at it like, look, I see what they're doing. I know what we're doing, and I know we're right about what we're doing. So if it's between just those two out of Apple and Robinhood, or are we just talking general?
No, just those two to start.
Just those two. I'll go with Vlad. I'll go with Vlad because of what else is coming, right? Like, so you talked about predictive markets, which has brought in tons of new customers and tons of new revenue. The leader, right? And I talked to him about it inside of the revenue field is still options trading. And so, that's near and dear to me. And so watching how they've evolved in options trading, watching how they've made Legend more applicable for people who are doing options trading. Like I said, it makes it more sophisticated, but also something that was interesting is the brokerages accounts that are going to be of the future. Right. So if we look at where the demographic that is on their platform, they skew younger and they continue to skew younger. And whether it was a knock for gamification and now for the predictive markets, he's meeting people exactly where they are, right? So if sports betting is something that he's seen that a demographic is doing, well, how we do sports waging and predictive markets, and he actually goes over this in the interview, how do we bring that to our platform where most brokerages are like, hey, we're not going near that. We're not touching that. He's leading and he's setting trends, whereas Tim Cook has, and there's a couple other things that he's at. We always try to discount some of the great things that he's done. He's done a great job as a leader, but they have been slow. Them losing pieces to the puzzle over the past year, we have to take
on the
that
executive management side. You mean?
We have to take that into account, right?
Who do you think?
You just can't take leaders. I mean, you can't lose leaders, not replace them, especially at a core moment in the company when we're talking about AI, when we're talking about how they're going to move inside the GPU or TP, whatever space they're moving. We already seen failures with some of the devices. Obviously, the Vision Pro comes to mind. Yes, they have hit an all-time high. Yes, they have moved in different demographics and geographics throughout the world. Yes, some of the devices, the AirPods, you just brought that up, have done well. but I still don't see the forward innovation. It's still the innovation that's happening here. What's the forward innovation? I haven't seen it yet, so I'll give the nod to Vlad.
Who do you think? Yeah.
As Vlad, and it's not even a close comparison for this year. I want to be very clear. This year, in 2025, Vlad Tenev is a better CEO than Tim Cook. I think year to date, Apple may be up
27%
versus 263. You can't discount that. The way that they've innovated, what they have on the algorithm side. I know you talked about options, but futures is dear to my heart.
Mm-hmm.
At a time when I didn't think they would move into the futures market so fast. Incredible innovation there, and what they're building on that algorithmic side that is coming out next year, which I'm sure we talked to you guys about. You're able to program your own little quant as a retail trader. That's something that a brokerage would like. That's something I dreamed of 10 years ago when I was getting started in futures. And also, he not only did he weather the storm, but going back to listening to the complaints and data from your customer pool, he took every request that most people had on the platform, delivered that and something better, while Tim Cook may have dropped the ball on executive management, product delivery, product design, and losing his AI chief and the AI model, so much so that now Google and Apple have come to an agreement for Apple makes it easier to switch to Google phones, because if I'm giving you a lifeline through through AI with Google helping Apple, now I need some leeway to be able to eat into that market share. So I just think Vlad has done an incredible job this year of taking all criticism. The stock was at $28 in April, and it took off to the upside. So for this year, for sure, he's a better executive.
Yeah, Apple's up 11%. I'm corrected. I was looking at the year to date. How much?
Yeah.
That's the dollar amount, but they're up 11%. Yeah, I'm with you. There was this quote that was like, and I thought of Apple when I read it. It was like, if you don't craft the future, you'll be the company that's reacting to it.
Absolutely.
And so,
and I would rather have an executive that tries and fails opposed to playing it too safe, because even with inflation, that safe bet of 15% used to be great. Now you really need 22% gain to feel like you're getting something significant out of the market. They're not trying harder. You failed on the car project. And kudos to those that are at HQ. I had a conversation yesterday with somebody who works at Apple. For the first time probably in 15 years, no major executive wants to be there as a primary option. There's almost like a backup, if you will. 10 years ago, you wouldn't have had that. Apple was the end-all, be-all. It was like technological heaven, damn near. Now it's a pit stop to make it to Meta or Google or a Robinhood or Perplexity. They'd rather be at a startup than be there. That's not good culture-wise.
they're not shaping it. They're reacting.
That's a fact. All right. Well, let's go into the. And then
Hey, no, we're not taking out 2 minutes. I'm sorry, Rashad, but
I
real
will
clear.
say this: when we did see Vlad, the first thing he did, he asked, he was like, "How'd you pull off InvestFest?" That was his question. He wanted to know how he was able to pull off InvestFest.
How do you do it? You give a blueprint?
Haha.
Schedule a call. Shout out to the Robinhood team.
Schedule a consultation.
Schedule a team. Nora, what's up?
Schedule a consultation, and we'll give the blueprint
With preferred shares.
Doesn't hurt.
That's a
It
fact.
doesn't hurt. Yeah, but definitely check. There's a segment in there. You know, sometimes you're inside of an interview or you're having dialogue with someone and you have an aha moment. There's like 3 of those that I had on Friday. I'm like, oh wait, oh
Yeah.
wow, because I know what he was trying to say, but he couldn't really say. But it was like the tea leaves were there. So definitely tap in with your notebooks on this one.
What's the future trading tip of the week?
I think it's an old lesson, but one that's really important, given because of the tournament, right? No, what your plan is, you have to stick with that for the next 3 years. What happened today? Because some people thought they were immediately going to be the leader on the leaderboard. And shout out to those of you who are in the top 3. And I had a chance to talk to a few people, and a bunch of people were telling me, well, because of the tournament, I changed my plan. I'm like,
oh man.
So you did this all year for the games to start, and now you're changing when you get in, when you get out. how many contracts you trade and everything that you've been doing for the last year or two. And I think sometimes when the pressure's on the line, and we've all done this, you'll do the analysis, but then when you pull up Schwab or you pull up Robinhood, you're like, well, what if this goes wrong? Let me try something different. And I think it's really important to lock in and just follow the same plan that you've been working with the entire year and not deviate from your original plan that you have designed for you. Whatever this plan is that you have in front of you, marry it. Some of you are too unfaithful in your trading and wonder why you're not getting ahead. Lock in.
Yeah, that's a fact. That's a fact. I had a conversation this week about that exact thing when we talked about emotional investing, right? Or having emotional discipline when investing. I had a few calls about it, and it was like, do you really believe this is going to work? And it was like, yeah, I believe. I'm like, but do you? Like when it doesn't, the trade or the investment ticks down, how do you feel? Right? Do you trust the work that you did up until that point?
Yes.
Whether the trade goes green or goes red in the next week or the next 2 weeks, do you trust what you've done? Most people will deviate and say, I'm out of here. I'm not doing this anymore.
Yeah, shout out to O2 Noob. He says you have to be adaptable. I agree, but you have to front load all the work in case things go wrong. So no different than I told my son this weekend in basketball. If they're pressing, what's your press breaker? If they sagging off you, what's the plan? Whatever the plan is, your adaptability has to be already pre-planned. No matter what. Your adaptability has to be pre-planned.
Have conviction with it.
So, okay. Let's talk about what do you think the biggest investing mistake of the year was?
For me, it was two things. Number one, anyone who missed out on that April run, I don't know if you're ever going to have a better opportunity. Like when I go back and look, because that Friday I did a Good Day New York, shout to them, and they were like, which stocks were bad to invest in? I'm like, all the qualities were great buys at that time. For the first time in a long, maybe since COVID, did you have such a chance to almost have a guaranteed win? So I think any capital that you did not deploy in April when we were screaming to buy is probably the biggest mistake of the year.
I have that exact thing in my notes. It said not taking advantage of the downtrends. I started in January though, when people felt, oh my gosh, what is happening? Nvidia is not real. Here comes DeepSeek. It's not real. The whole AI thing isn't real. And we saw all of these companies drop. That was the first one. Then April, it got compounded with the quote unquote Liberation Day. And then we had a class, and it was like, it goes back to the original question of like, stick to the plan. Because I remember in April, we had the class, I'm like, look, let's just stick to the plan, right? Let's find some indexes to invest in. Let's find some ETFs to invest in, and let's build from there, right? Those indexes and those ETFs are up 200, 300% right now.
Easily.
Just because it was like, we know what the plan is. Oh, the moment has happened, implement the plan. Let's watch it happen. Those are up 300%. And then you got the companies that were inside those ETFs that were going to lead it, the AMDs of the world, the NVIDIAs of the world, Microns of the world. And so now you got the ETF running and you got the individual equities. I actually did a leverage ETF. Was the first time I did that in a semiconductors because I believed in the space so much. That's up over 900%. Sticking to that plan, but taking advantage of opportunities. What do we do in November, right? There was a 5% pullback last month. People were scared. Oh my gosh, this AI thing is,
and it's only 5%.
It was a 5% pullback.
Come on, man.
Another opportunity. Another opportunity. Somebody, shout out to somebody in the chat. They said, yeah, XOXL was at $8. It was at $8.
Yeah.
I bought a $28 call. So imagine what that looks like. Right. So it's about taking advantage of those moments. When you see those moments happening, it's like, oh, you waited. Here it is. Yeah. What are you doing? You got the script. Stick to it.
And the second mistake, if I can give one, for every investor and trader, I think you need to hunt for what the next sector is that is going to rise outside of quantum. Like all of your investing prowess. We had the gentleman from BlackRock come on and he kind of gave you like the 3-tier plan. If you're not spending all of your time figuring out which company is going to boom next in 27, you are going to be sadly mistaken. Because now we're getting into a space. I don't know if we'll ever go back to when value investing is ever needed or popular again. You need to hunt for the next company that will have a meteoric rise, that is sustainable, that will be life-changing to the economy. And also, too, they're going to be a company that is currently dominating their sector now in terms of market share and mind share. So when we think of this chip race, we think in NVIDIA, when we think of smartphone, we think of Apple. You need to search high and low for the next company that is about to break out in 27 or 28 for a long period of time.
Yeah. Fact. Shout out to the chat. Yes, XLU, Spider Ticker, ETF did split 2-1. XLK also split 2-1. So yeah, so if you had one share, that now turned into 2 shares. If you had 10 shares, now you have 20. And that goes as well for options contracts. If you had 10, now you have 20. So those 2-1 splits, just be mindful. I know it was kind of weird when you open your brokerage account and you had an option and the contracts doubled, but the money's like you're down more than you ever thought. It's just because the options, they haven't adjusted. The business ads haven't adjusted. Somebody asked, have I ever had a losing trade? Yeah, I've had a losing trade. I think I was on here. I talked about Kava, and I talked about where my entry was and where I was going to exit if it got to that point. It got to that point, and it's fallen ever since. So yeah, I've had a losing trade.
Okay, let's talk about Carvana.
Oh man,
joining the S&P 500 after almost going bankrupt. So is this a real comeback or a sign that the market is getting reckless again?
It's a real comeback, but what will happen as a result? Because Carvana is one of those ones in 2020 that I loved. Then I got criticized for it during the drop, and I was like, hey, you need to look to get back into it like around 41. Here we are at 447. It's going to lead to a lot of other companies saying Carvana dug themselves out of the grave. We can do it too. And those companies will look like the extras in a Michael Jackson Thriller video. Every company is not Carvana because Carvana did it. This is a very unique case. I wish Square would have did this.
So in full context, to put it in perspective, in 2022, Carvana was $4.
Yeah, it got to a low. Yep, $3.79.
So right now it's $448. So what that represents is a gain of 11,000%.
Yeah.
So it gained 11,000% in 3 years. And like you said, it was actually at death's door.
Yeah.
It was on the verge of just complete collapse. And now it's rallied 11,000% in 3 years. And now is a part of the S&P 500. So, well, why? What was the catalyst for the miraculous turnaround? And is this the greatest turnaround story that we've seen in modern history?
One of the greatest ones, I think. If we're going to go all time, or at least our era, Amazon has to be in great consideration because after the .com crash, they were calling for Jeff Bezos's head on a stick, if you will. And the remarkable turnaround that they've had since then is something like out of a movie. So this is very close. I think the company, the one thing I don't like still is the net margins are too thin for me. But given the infrastructure, the changes that the executive management has made, like another story similar to Vlad, when you mess up, the executive team is either going to right the ship or they're going to put their hair under the sand and say, hey, we did nothing wrong. The customer's wrong. And they found a way to claw themselves out. And not only that, when the business was falling apart, they were always honest about the numbers and they never lost the trust of Wall Street. That's really important. When an executive is just losing and getting his face kicked in and he's not lying or putting on a story as to why the company's underperforming. And they had a chance to turn it around and they've done an amazing job. Now, I want to be very clear. They are the exception to the rule. So don't think this is going to happen if a stock normally falls as far. I don't think, and maybe too, they got caught up in a little bit of the hype of that COVID era and saw the benefit of it and kind of took their foot off the gas and didn't manage as well as they should have. But I want to be clear, this is an exception to the rule, but they did a great job in turning this business around. And as a result, the stock going up a lot. And also it's a testament to sometimes a price is so low from a technical standpoint and from an investment standpoint that the risk is all the way to the upside. There, like once they got to 3 and some change, or they fell to 4, if you believed in a company similar to what MicroStrategy is going in now, you have previous levels to where they were. So even if you got in at 3, there was a case for it to get to 156. If United Healthcare has another CEO, they should probably pop another $112 or another $115 to the upside. But you have to have complete belief in this company, and they've done a great job turning this around.
Yeah, I mean, it is one of the greatest stories we've seen. I'm with you on the idea of it feeling like it was a COVID stock and it was part of this. Hey, everything's running up. The used car market demand. The reason it fell was because of it potentially was almost going to bankruptcy. When you think of it from that standpoint, to be up 11,000%, to be trading over 440, it's pretty remarkable.
Yeah.
They've chained operations. Obviously, they've settled, some of the debt structure that they had. But is it the market acting reckless? I don't think so. I don't think in this case. I think this is a unique situation. What is concerning is that the used car market is still dependent on people buying, right? If interest rates continue to stay high, what does that look like in the space? When we talked about the average used car price, we saw that number go up
Dramatically.
Dramatically. Why has the stock continued to run? Obviously, we talked about some of those things, but inside of it, at its core, they were the first to market in this space. Right. So any other competitor inside this space doesn't have that same advantage. It doesn't have that advantage. What we will see is in the next few years, can it be sustainable? That would be interesting to see, right? Because if we're talking about credit defaults, if we're talking about student loan defaults, if we're talking about used car payment defaults, all those things would have an effect on a company like this. But they've had a hell of a turnaround. Credit issues in the future we're going to start to see, especially when we're talking about people losing jobs, people defaulting. Credit issues will now affect the car industry. We'll see if it's sustainable, but right now it's one of the most miraculous stories we've ever seen.
Is the used car market even going to be a luxury market?
Is it a luxury market?
Is it going to turn into one within 4 or 5 years?
Why would it turn into a luxury market?
In terms of affordability?
In terms of affordability.
Why would what do you mean?
Can the average, I guess you're speaking from the point where can the average person even afford a used car?
Yeah, I don't see any $5,000 or $10,000 used cars.
Yeah, the days of I can buy a
$15,000
or $3,000 used car,
it's over with.
That's done.
With inflation,
you can still buy a cheap used car.
what price range?
$20,000.
$20,000 is a lot of
$15,000.
It's a lot.
Okay,
$15,000 is a lot of money
For a used car?
yes, it is, brother. Yeah, bro. Yeah, what?
Like a college student?
Yes, 15,000. Wow.
You're not. It's not like you're not giving a check for $15,000. $15,000 is like a $150 car payment.
But the average used car is $30,000.
Somebody said in the comment, police auction, but I'm just talking at scale.
At scale, the average used car for the United States is like 29,000 average.
That's cheap.
That's a lot, Rashad.
That's not a lot of money.
Rashad.
What's the car payment? What's the car payment for $29,000 car? $200?
No.
Probably with given interest, maybe somebody can put it in chat, but real quick,
probably
475, 550.
No.
Yeah, well, I just try to get a young boy a car.
For $20,000 car, he
no,
have
30. It was 30,000.
His credit. We said 20.
Well, we're gonna talk about this.
No, I said the average. I said the average cost is 30,000. I didn't never said 20.
Well, we reported on this. The average payment for
72 months is $300. So $300.
At what interest rate?
At 72 months.
At the regular interest rate.
Well, that's what I'm saying. Credit comes into that. So, like, if a kid got a student loan that he has,
average, we're going by average, 7% interest rate. So,
what about 60 months?
$300 a month is a very affordable amount of money to pay for a car. That's affordable.
Yeah. Somebody put in chat the average payment is $460. We talked about this a couple of weeks ago.
Yeah, the issue, like I said, I try to do this to a young man in the neighborhood. I try to get him a car. And one of the things was the credit. So obviously his credit wasn't the best. He had like a 650, and so that brought the interest rate up to
which is not the worst credit score.
It's not terrible, but it brought his payment up to like $500, right? Then he had to get his own insurance because his mom's like, "Yo, you got to get your own." The amount that they're charging these kids for insurance,
crazy, bro.
I'm like, yo, it was an additional like $300 on top of it. So you got the
Easily.
car payment, you got the insurance, which started out as $300 is now going to cost you $800, which is like, damn, a kid in college, if he's going full time and gets a job, like it's going to be tough.
Good credit. It matters.
Let alone the gas you're going to have to put in there. And if it's used, that means it's going to need repairs.
But
Right? So
according to
have,
JP Morgan, in a few years, oil will be $30 a barrel. So
do you? Somebody said just go to Carvana.
Hello.
Right. That's a mistake I made. I bought a used car, right? And I thought, hey, I want this car. I'm gonna get this car. I got the car. I didn't realize the maintenance that it was going to cost me to keep that car. Because one thing I learned about, like, at the time was a BMW, and I'm like, those parts are expensive. It doesn't matter how old the car gets.
It doesn't matter, bro.
The parts stay at the same price and they're
The
expensive.
oil change is $250. Any service is $700 off top. I don't care what you get.
Be careful, y'all.
Mm-hmm.
Yeah, but I still think that people have cars. People buying cars. It's not a car crisis. It's a
No, I didn't say it was a car crisis.
No, I'm just saying the
affordability and price. Yeah, that's what I'm saying.
Affordability of eggs is out of
your first car.
Everything.
You remember the payment that you had on your first one?
Yeah,
it was under $500. For sure.
No, not really.
I remember it.
How much was it?
It was like $370 something. It was the Infinity.
It was an Infinity.
I remember it.
It was at $470.
It's under $500.
That was 20.
And that was a nice car.
That was 20 years ago.
And that was a nice car.
But that was 20 years ago. It's inflation.
Yeah, exactly. So that's what I'm saying. Like, that was a very nice car. We're talking about, like, I'm talking about like a Honda, bro. I try to get him a Honda.
You can get a Honda right now.
That's what I try to get. That's what that price was.
You can get a Honda.
He was like, yo, it's going to cost me $1,100. I'm like, how did you get to that number?
Mm-hmm.
No,
and then when he broke it down to me, I'm like, all right, well, maybe you just keep the car you have.
He got to work on his credit.
Well, that's going to cost money too.
For sure.
You can get a Honda out here.
Mm-hmm.
Nissan, Honda, Chevy.
Okay.
But to speak to inflation, like 100,000 now puts you in what, the top 30% in earning potential in the country, and probably 20 or 30 years ago would put you in the top 8 or 9%.
Say that again?
Yeah, because people, it's a nuanced conversation. We'll have this on Blackout. What is a lot of money? That's what it goes down to. Is $500 a lot of money
to pay for a car?
Is it a lot of money?
It's $500. That's relative. No, to me, it's not. No.
To some it is.
That's to me. But some, I understand that it's not. There was a time where that was a lot of money.
To actually a lot of people, $500 is a lot of money.
There was a time when that was a lot.
Yeah,
it's a different time.
So it's all relative.
It's all relative.
Inflation. Mm-hmm. Waiting on this Fed rate.
All right.
Not going to happen.
We're going to talk
the odds are in our favor.
We're going to talk about the Netflix thing, but I want to wait till our guest comes on.
It's in our favor.
Have that conversation. So when we're talking about Leap, what's a good stock currently on a dip that looks attractive for a Leap or a swing trade?
You want me to go?
Yeah,
you want to go? All right. So I actually called Shadi about this today. And for my EYLU people, y'all know that I've been in Oracle for a while. And we took profits and we've seen Oracle pull back. Here's why. They have a catalyst event. So I always take those things into account. Obviously, they have their earnings coming up on Wednesday. Broadcom also has their earnings on Wednesday. And then we have this Fed decision. And I think I got to put both those things in because I'm talking about catalyst events that can help move uptrend or downtrend for a company. Mm-hmm. When I look at the metrics and like when we talk about what's your plan, well, number one, has this company moved down from 20 to 30% from their all-time high? Absolutely. This thing has went up, shot up to 343, and we caught that uptrend. We took some profit, and now it's sitting down here at 220. So it's definitely pulled back over 20 to 30%, so at 37%. Well, inside that, do I look at the option calls and see if they depreciated? This one I can look and see already that this one has, the leaps have gone down by at least 50 to 60%. So those are two metrics that I do like. Now I look at the fundamentals for it. Is it a strong company? Yeah, is it a strong company? Do they have some things that they need to report and go well? Yes, right? The money that they're spending on AI, people want to know where is it coming from, how are they getting it, and is it going to be worth it? So they'll have to have some good earnings in that sense. The cloud business, though, I think is still something that is legit. I think that's definitely a revenue metric that has to be taken into account. I think it's pulled back to a point where if people are looking, and I know they were like, "Oh my gosh, we missed this run up," isn't an opportune time. For me, it's looking like an opportune time to be in a leap. I called him about it. I didn't get to show him the one I'm looking at, and I'll probably put in EYLU probably tomorrow morning. But I'm looking at it because I'm saying, has it depreciated? Yes. Are we still in some of those calls that are down? I think one of them is like down 27%, 30%. Yes. Is it a strong company that has a definite role in the future of the sector that is going to grow? Yes, AI, I believe, is a sector. Yes, I believe Oracle will play a role. Obviously, their partnership with OpenAI. Obviously, what we talked about in terms of Stargate. But they also have ties to other things as well, and we'll get into those later on. So this is a company that I'm looking at. That would be a leap that I'm looking at definitely for this week. Obviously, I don't like to do leaps on the day of their earnings, but this is a unique case where I'm like, this has fallen so far that there might be some upside here.
For me, on a pure swing trading basis, not option related, if Meta gets back to 614 to 600 flat, I really love it. I don't know. I think it's incredibly underpriced. I think fair value for Meta now should be 715. Before the fall, I had the price in Stock Club, I think 30 days or 25 days prior, so everyone kind of knew where to start to load the boat up at or get in the swing. But if it gets from 612 to $600 flat, I like Meta for the long-term hold by Q2 of next year. I think Meta should be back at 750, 851.
Love Meta.
Yeah.
Love Meta.
Yeah, we got into a Meta trade when it dropped that, I think it was like 2-3 weeks ago. It had a very large drop, and then it dropped actually consecutive days. And Dave Shands got him in that trade also. So
the same one?
Yeah. But Meta, yeah, definitely with Meta, because we've seen this happen before. Remember this happened. Meta had the largest, at that time, it was the largest stock drop in history. And then it rebounded, and this has happened a few times in Meta's history where the stock has dropped pretty drastically, but definitely got to be bullish on Meta long term. So whenever that happens,
take advantage.
You got to take advantage of it. You definitely got to take it. Somebody asked what are leaps. Leaps are like options contracts that go out 6 months and beyond. I like to do mine at least a year. So somebody's looking at like, what am I looking at? I'm looking into January of 27 right now. Somewhere probably in the money or at the money. So if it's trading at 222 or so I might be looking at a 230 or 225. Just a little game if you needed to know.
And Meta spending has been more under control and going to better assets, so it doesn't make sense why. Like my criticism of it in 22 was the spending on the metaverse, I think was ill-timed and it wouldn't pay out. They've probably deployed, and the return on that capital will be the highest probably in about 3 or 4 years. I have no clue why most analysts like downgraded them that much or shorted the stock that much. I think it's absolutely asinine.
The crazy part is that they didn't even downgrade the stock. It just investors start to sell off.
Yeah.
I like the mindset that he has. I just think I agree with it in the sense where he's like, look, if we overspend, okay. What we can't afford to do is underspend and let
because the price is going to, once again, inflation creep. When the new chips come out, you would have killed them for that spend next year. So to front run and to deploy the capital at the right time, it's like I don't understand it. But
yeah, get ahead of it, man.
Yeah.
Well, once again, going back on Meta, saying like, you know, what we've seen this movie play out before. Another movie that we saw play out before was Bitcoin. So Bitcoin has been hovering around 90,000 for about a week now. Dropped and rebounded. So is Bitcoin headed for 65,000 or 70,000? Or is this just an emotional driven speculation? I saw Tom Lee saying that by the end of 2026 is going to be at an all-time high again.
At the end of 26?
At the end of 2026.
Okay.
That's what Tom Lee said.
Okay. Kudos.
So, yeah, Bitcoin.
Simple. If it falls to 60, buy. If it falls to 70, buy. Hold for the long term. Do I think we'll get there this year? No. If we get there next year, it's a great price to buy. If we slide back into the 80,000, I think we can, worst case scenario, get back to like 80,000, 81,750. Those are all buy zones. 60, you have to love it. You have to love it. Once again, everything that could go wrong, you have to front load into your research. What are the 3 prices you would want to buy an asset if it absolutely fell apart based on different ranges? And 81 and 60 are great, but it doesn't do you a great job to worry about it. I think you should definitely deploy more money at the 60 and 70 range if it happens. But if you're holding for the long term, none of those concerns should matter. But I definitely think, just looking from a pure technical standpoint, anybody who's buying in the 120s or 115, you're getting in too late. You're getting in too late. So if you're concerned, wait till 81 and some change. But could it go to 60? Worst case scenario, yes. But that would probably be the best buying opportunity in Bitcoin since it got to 20,000.
Yeah. And then also another thing I saw online was, the conspiracy theory of that quantum computing is going to lead to the end of Bitcoin because it's going to get so advanced that it's going to be able to hack any wallet. And they rolled out a whole doomsday scenario of
I saw that.
Satoshi's wallet being hacked. And once Satoshi's wallet got hacked, then that just led to complete, fear and selling of Bitcoin, and to the point where it just dropped to zero. So the thing about that is that Bitcoin actually is not something that doesn't evolve over the course of time. So the technology is evolving. And the quantum computing hacking situation, I mean, if that's the case, then anything quantum computing hack.
Could hack.
Yeah, including your bank account.
Bank account.
Including your brokerage account, including your Coinbase account, including government, everything.
Mm-hmm.
So but that's not the only technology that's advancing. So as that, it's like anything in life, as the bad guys increase their muscle, then the good guys have to increase their muscle as well. So
or they're gonna hire the bad guys to figure out how to encrypt it.
Yeah. So cybersecurity is definitely gonna, improve over the course of time. But that doomsday scenario of Bitcoin, like I said, Bitcoin is not something that does not evolve. It does evolve over the course of time, and technology is open source, but also that's not the only thing to worry about. If that's the doomsday scenario, then everything on Earth is going to fall victim to a hack of quantum computing.
I agree. That's been floating around for a couple of years. I don't think we have to worry about that. And like I said, they'll pay Langley to pay whoever they need to encrypt what's over there. That won't drive it to zero. Even old boy's involvement with the little play, that won't drive it to zero.
We should call our friends at CrowdStrike.
All right. Well, let's bring our guest on. We have our guest, Caleb Silver.
Friend of the show. Caleb, what's good, my guy?
My brother, how are you?
Nice merch.
Y'all 20.
Caleb, what's up, man?
Good merch.
Hey, Caleb.
Good merch.
Quickly,
Good merch.
tell them what happens every time you wear that sweatshirt, man.
I get so many phone numbers dropped on me. I got people DMing me left and right. I can't walk around with my family. It's embarrassing. Not only do I look fly fresh to death, it's warm. You guys got a good sale going on right now. And it is probably the most important metric in the stock market right now. Assets over liabilities, right? Gross profit margins, revenue per employee. That's what's driving a lot of these stocks right now. So your logo is perfect. And this is the perfect hoodie for the cold winters of New York City.
Yes,
I
sir.
appreciate you. One of my favorite people on the planet.
Absolutely.
Yes, sir.
And I tell my friends not to kidnap you in Atlanta anymore.
Yeah, that's okay. That ended up being one of the greatest nights of my life. Shout out to my guys in Indy right now. I know they're tapped in to Market Mondays as usual. Good to be with you as always, my friends.
Yes.
All right. So Caleb Silver, editor-in-chief of Investopedia, and just all around very intelligent person when it comes to stocks, and has been a great resource and friend to the program and everything that we've done, from InvestFest to Market Mondays to Earn Your Leisure. So always appreciate when you come on and share your wisdom. You've done technical analysis when it comes to cryptocurrency. You've done all types of different stuff. So I want to start the conversation with Netflix. So we talked about this on Instagram a few days ago, where at the time it appeared that they acquired Warner Brothers and all streaming assets for in a $72 billion deal. And that was something that really just broke the internet. But then a few days later, the Trump administration raised concern about Netflix purchase of Warner Brothers and said that not so fast, as far as raised the concerns about it being a monopoly. So, okay, let's have a whole conversation about this. But first, let's talk about from an educational standpoint, and this goes to the website for people that may not know, what is a monopoly, right? Where does the antitrust in the government come into play at some point in time? I believe, this is like to stop all of the Carnegie and Rockefellers things that happened in the early turn of the century.
Right.
So talk about monopolies and how this all comes into where we get here now.
Yeah, this is beautiful. This is the entire sort of history of American capitalism all coming to an head over entertainment assets, the biggest ones being obviously the Warner Brothers library and Netflix, which would have become the biggest content company in the world, basically. So monopoly goes all the way back to the antitrust acts of the Railroad Acts, the Sherman Act of the Railroad Acts in the 19th century, late 19th century, when the railroads were developing in this country. They were building out, trying to get cross country, and there were several big ones that were colluding together, and that defines a monopoly when you have two or more parties colluding together to try to corner a market and control market share. That is deemed monopolistic when they make it anti-competitive for competitors to enter the market and anti-competitive for suppliers potentially to supply to those competitors. That's monopoly. And usually the Federal Trade Commission rules against monopolies and have tried to strike them down, except when the price is right. And we saw today, or was it today or yesterday, a beautiful hostile takeover bid from a competitor now entering the market. So you have a monopoly, potentially, you have an antitrust ruling, and now you have a hostile takeover bid, all wrapped into one story. This is Investopedia wrapped up in a beautiful box with a bow. I love it.
But doesn't this make it a little bit more interesting that the administration is involved in this? Obviously, they said that they don't want it to be a monopoly, and then today the president said that he doesn't have friends on either side. But a little dig into the research, he doesn't have friends, but he definitely has family on one side.
Vested interest, yeah.
He definitely has a vested interest. I mean, this is pretty unique, no?
Yeah, it's pretty unique, but it's not unusual to this administration. The last time I was on here with you guys a few months back, after this administration took office, I said the most important metric right now for companies is proximity to power. Who is sitting at the White House? Who's having dinner? Who's being invited to the CEO private dinners and Mar-a-Lago for golf and drinks by the pool? And if you're in that camp, you've done very well as a stock. And this administration has proved that it is going to do what's in its best interest and the best interest of the people that are close to it, and also put their hand into private businesses, whether that's investments in companies like Intel, or whether that's trying to strong-arm deals between NVIDIA and its suppliers, or AMD and its suppliers, or guarantee that companies build factories and infrastructure here in the United States. They're going to do it. So assume that they will have their hands in this as well.
Ultimately, who do you think ends up winning the bid to acquire the assets?
The highest bidder, and the highest bidder will definitely have to, fill a few pockets along the way, and that's just the way it goes. And it's not like it's that unusual for this administration, just a little bit more blatant. This has been going on for years and years and centuries in this country. That is really the history of American capitalism. And if you need any proof of that, Andrew Ross Sorkin's terrific book, 1929, really tells that story pretty well. Things are not that different, guys, almost 100 years later than they were, and we're in kind of a gilded age right now, too.
So is this a thing with they saying, okay, this is going to be the biggest deal ever when it comes to the entertainment deal, and I'm not involved in it. As far as Trump, let's slow this thing down, because you can't make these types of deals if you don't check in with Hefe, right? Like that's disrespectful. It's like. Yeah, it's like Narcos. You can't go on my turf and not at least include the family in the situation.
Yeah, but he did.
Did they?
Yeah, like American Gangster, right? Don't come over. Don't cross the bridge without our permission.
That's a fact.
So Ted Sarandos, the CEO of Netflix, sat down with him, and he thought that they were on the same page.
Sit down. I'm talking.
Which is why he didn't
open the trunk.
What's the deal structure? Yeah.
So that's what makes it very interesting, is that he actually sat down with him before they announced the deal with Netflix, the Warner Brothers deal, and he thought that they were on the same page, which is why he came out Friday and said, we're doing this deal. Obviously, we saw, David Ellison had a different standpoint on that because he's saying, look, not only did we offer more, Netflix deal was for $72 billion. They said they offered $108 billion. So they offered more money and they offered more per share. So they were going to pay him $30 per share.
Per share, yep.
The Netflix deal was at 26 and a half. So there was more money involved. They said they were going to protect Hollywood. So David Ellison saying, like, this is the CEO of Skydance Paramount. What happened? Right? This it makes it pretty unique, which is why when you look into it deeper, so like that's the part that's like, okay, well, why is he coming on saying this? And it goes back to when we talked about the wealthiest people in the world and what do they all want to control, and that's media, right? And we've seen it. And the only thing that Larry Ellison, who is the father of David Ellison, doesn't have at his leisure is media, right? They had Skydance, they got Paramount. If they were able to acquire this, now he has a full conglomerate. What makes it even more.
He's got CBS.
And he got CBS, right?
Yeah.
But CBS is a debt. It's a huge debt. It doesn't make any money. Paramount doesn't make money. So the thing about it is now, how do they fund this? How are they going to get $108 billion? And that's the real tricky part, because in order to get the $108 billion, they have to raise it. And so you start looking about where they're getting the money, right? If you look at the list, you got the Saudis, you get Abu Dhabi's involved,
And Jared Kushner.
And so that's where the buck stops for me, right? So
Tencent.
when you start looking, Tencent, Infinity Ventures, whose president is Jared Kushner. Now this deal, as soon as that deal goes through, here comes the Ellison Group. Wait, this is not what we agreed to. We had a better offer. Now what does it even mean to have a hostile takeover? This is language that is like, okay, we know what that means in war. What does this mean in business?
It means breaking into a deal with a higher share price offer that makes shareholders who have a responsibility, and the executives and the board of directors have to consider it very seriously. They have a fiduciary duty as the board of directors to do what's best by their shareholders. So if somebody comes in with a higher offer, even though you might have a deal in place, even though you might have a $5 billion breakup fee, which I believe this one has, they have to consider the offer. If they don't, they could be sued if Warner takes that other offer. If they take a lower offer, they can actually be sued for that, and that could end up costing them hundreds of millions of dollars down the road. So they're weighing these different probabilities out, saying, well, is this likely to be approved anyway? Can we raise the money? And if the money that we can raise, is that going to be approved by this administration? Is everybody on the same page here? It's like The Wire. You think it's one way, and it isn't. It's the other way. And that changes real fast when a higher share offer comes into play in the form of a hostile takeover bid.
And then, Ian, before, just follow up, because somebody put it in chat, and shout out to them. Jamar Parkinson. Barbarians at the Gate, a great movie to watch for anybody that's interested in the stock market, because this is like on a very, very high level, but on a small level, this happens all the time. So corporate takeover artists, that was in the 90s when they made that movie about investors taking over companies strategically. You buy enough stock, then you go to the workers of the company that have equity, and you get their stock, either swindle them out of their stock, or you just buy it, and then you go to the board, and then you talk to the board, and you make deals with the board, and then before you know it, the board switches on the actual CEO. It's like a
icons move.
It's like a coup d'etat in business. And
absolutely,
some people say Elon Musk. When you really look at it, that Barbarians at the Gate was actually a great book. The movie was based on the great book, I believe, by Bill Burr, and it really tells the story of RJR Nabisco at the time. That was the biggest hostile takeover in history, and that was a bunch of private equity investors coming in for the assets of RJR Nabisco, breaking up that big snack giant and the tobacco company at the time. But this is not that different, except the numbers are even bigger. And what's at stake when you think about media and control of media, and what this would actually put in Netflix pockets, or
or in the case of the Ellison family, what they would put in Skydance's pockets is one of the biggest film libraries of all time, plus the access to other things. And in Netflix's case, what do they want? What are they trying to corner right now? Entertainment, which they're pretty close with, and sports. They're getting more deeper into live sports. So if they have both those assets, they become the must streaming service. And that could be anti-competitive. It is anti-competitive, but there's a lot of anti-competitive behavior out there that just gets allowed because the dollars are right.
I was just going to say, just a follow-up to it. In between all of this, right, as we're watching this news, are Netflix investors, right? Because when you watch a stock and the company says they're going to spend $72 billion, obviously we've seen the stock just go down lower and lower. How should investors of Netflix be looking at this situation?
Yeah, I mean, there's two outcomes here. Either Netflix is approved to do the deal, and it's going to take a hit because it's going to cost it a ton of debt. And that debt, even on the back of a company like Netflix, which is very profitable and been growing very nicely, that weighs over time. So all of a sudden it doesn't become the growth company that it was. And it's really amazing that it still is a growth company. It keeps growing subscribers and adding $1 every year to every subscription. It's a beautiful business. So you got to be concerned about that, or it falls apart and Netflix is Netflix plus the $5 billion breakup fee that it has to swallow. So not a great situation either way. Now, over time, if the deal is approved, it could end up being a great, in one of the great deals of all time, but it's going to take a long time to get that share price back to cruising altitude, just given the heaviness of the debt. So it put itself in a weird position. It might win, the overall war, but lose some battles along the way in terms of share price. That said, its shareholders are super loyal. It's one of the top 10 best performing stocks of the past 20 years.
If Netflix isn't doing the consumer any harm, and I know Jared said that there will still be movies by Warner. He would make sure that the consumers are taken care of, the creators are taken care of. But if we're clear, I think the assets will have a better house with Netflix. Is a monopoly a bad thing if you're taking care of your investor class, consumer class, and the creatives in which you're acquiring?
Yeah, the last part's the tricky part, the creatives and the suppliers of the content.
Yeah.
Right. We are, not far out from that big strike over a year ago that really brought Hollywood to its knees, but it was really a reckoning that saying this business has changed forever, right? It's never going back to the way it was. So in a way, this is a way to control that race to the bottom. But if it's at the expense of creators, if it's at the expense of the entertainment industry and producers and studios trying to get content out there, that becomes anti-competitive at some point in time. Now, you can say you're going to take care of your people, but who are your people at the end of the day? And if you continue to raise your fees because you're the dominant streaming service and squeeze other competitors out, that is a monopoly. No two ways about it. Not saying it won't be approved, but it will be an operating monopoly. And we have a few of them that are already out there.
Yeah.
So, yeah, I mean, it's interesting from a standpoint of the hostile takeover, because even talk about Netflix and, that's what they said. Diddy came with the baseball bat. Shout out to Loon. Shout out to Loon. He said you're gonna have to come with a little bit more than a baseball bat for 25%.
That was a great
take. Yeah, for sure.
That was a great take.
But Kirk wasn't built like that.
Nah, you got it. Come
25% on a baseball bat.
Come on, bro.
That's tough.
You got to hit somebody in the head with that pull.
Yeah, that's tough. But I will say this: sometimes also it's not a hostile takeover, but it's a long-term takeover. And I think they love to get your opinion on this. One of the greatest long-term takeovers that we've ever seen is Tesla. Nobody really talks about that. Elon Musk was not the original founder of Tesla. He came in as an investor and then strategically over the course of time increased his influence, increased his shares, had gained influence with the board, and became the CEO. I think there was actually even lawsuits of the original founders of Tesla after the whole thing was done. But Elon Musk took over Tesla.
Yeah.
So talk about that too, because that happens sometimes too, where you can actually get in on a ground level as an investor and have a long-term plan to strategically take over something, and then before you know it, I guarantee you, not one person knows the original founders of Tesla.
Yeah, you never hear about them. Their name's not on any car. They're not memorialized in any way. And he did that, but he came in with a lot of money too. Remember, he was part of the PayPal mafia, part of that group with Reid Hoffman and others that built PayPal, really built, a lot of the early parts of Internet 1.0 and 2.0. So he did come in with a sizable percentage, but he did accumulate assets over time. It was sort of a creeping takeover, not necessarily hostile, but he was accumulating shares along the way, much in the way that, you might find even the Carl Icahns of the world did, but Carl was trying to take over companies to literally take them over and then break them apart and sell them. In the case of Elon, it was so he could take over the company and craft it in his vision. And his vision for the company, we're seeing it right now, was not necessarily the cars. It was always the batteries first, right? Yeah. Batteries first, and that could turn into cars. But now we're seeing what he really wants to do with it, which is robotics and agentic AI. And he thinks that's the future, and driverless cars. That's the future of the company. But it was a slow takeover. It took a number of years for him to finally accumulate enough shares and then enough influence among the board and among outside investors to eventually take over the company. I can't remember what year it was, but he did that. And then he eventually took it public famously on the NASDAQ, also became one of the greatest stocks of the past 20 years.
Yeah.
When we talk about this takeover, I mean, we just have to look to recent history if we want to see how the future is going to play itself out. Yes, it does take time if Netflix does get approved. But we said this about 5 years ago when Disney purchased Fox Searchlight. And we thought that was the biggest, and it is, right? To this day, like that was the biggest transaction unless this gets approved. What are some of those similarities that you saw inside of that merger, right? Because it feels like it's not just one monopoly that's happening. Like Disney has its leg, right? When it took over Fox Searchlight. If Netflix gets this, you'll have those two. You'll have Amazon Prime. You'll have Apple TV or Apple Plus. And then everybody else kind of has to just figure out what they're going to do or figure out how they're going to be acquired. Well, how is the scenario looking for streaming going forward from your perspective?
Yeah, well, just take a look at Disney's share price since that happened. It's a disaster, right? It's one of the greatest companies in history, but it's a terrible stock. It's a terrible stock because it overreached, right? Plus, it had the pandemic, and the pandemic hurt its parks business immeasurably. But the streaming business did come on pretty strong. It tried to be too many things at the same time, and it was too asset heavy. The thing about Netflix is what it is, and pretty much what it has always been, absent the mailing you a DVD in the red envelope. What has it become? It has become the dominant content streaming company that also is one of the biggest producers of content. A lot of people don't know how much they spend every year. They spend like $20 billion producing content and licensing content and accumulating this massive library. So it never strayed, and it's never planning to stray from its mission, except it might stray into sports and some live entertainment, as we've seen. So because it's more of a pure play, I think it has a much better future in acquiring this enormous library of assets than a Disney did, because it was just another acquisition for Disney at the time, a big one, but it didn't end up paying off. And that library is not as valuable as the Warner's library, as the Warner library. So in a way, because it's more of a pure play, I think it's got a brighter future than a Disney might have done it. And again, you can't be saddled with all of these heavy assets that are vulnerable to downturns in the economy, right? So if it's just entertainment, I think it's probably a win-win, but it's going to take time, again, for that stock to appreciate in the way that it has over the past 10 and 20 years.
Two-parter for you. Is there a third party that you think will make a bid to outbid the current group? And a year from now, do you think Google and YouTube outpaces Netflix and Paramount, regardless of who acquires this asset?
Well, I think YouTube, is in pole position. Netflix may have the best streaming service and the biggest subscriber base, but YouTube is the biggest advertising delivery mechanism on the planet with the biggest audience worldwide. We see everything that they're getting into, from streaming terrific shows like this to, building the Shorts library to every possible manifestation of producing content. So I think it's really a race between those two. Amazon could play in this mix, but I don't think that would be a good use of shareholder money. And I think Amazon knows that too. Its future is in the cloud and in Amazon Web Services, and the other businesses are nice, but I don't think that it comes in as a potential competitor. And look what's happening across the media landscape right now. NBC and NBC News and Versant splitting those assets out right now. The CBS deal into Skydance that tells you where that's going. And then there's a ton of private equity money that is into the production of content and into the AI production and delivery of content. So I get the horse race between Netflix on the one hand for pure entertainment, YouTube for everything else.
Okay, so let's talk about some other economic factors. the jobs report was canceled for the first time in American history. So what does this say? That amongst other things, but what does it say about the state of the economy? And what's your thoughts on where we're headed in 2026?
Yeah. The fact that we haven't gotten the government jobs data, that it's troubling for business journalists like me on the one hand, but we're getting so much data anyway. We get great stuff from ADP every month on the private payrolls. I think that tells you a lot more than the BLS survey of households and businesses when they're literally calling tens of thousands of them on the phone and emailing and saying, are you hiring? How many people are you hiring? Are you planning to hire in the next 3 months? They do that in the first 2 weeks of every single month. So by the time you get it anyway, it's already 3 weeks late. And it's based on an extrapolation of all those phone calls and emails. So I never thought it was that exact. And it was getting muddier by the second, given everything that was going on in the Labor Department with the Trump administration. So the economy, I think, is in better shape than people think, and certainly than the way people feel. People feel terrible about the economy right now. Consumer confidence, guys, as you know, is almost as low as it was during the great financial crisis. And we're in much better shape than we were back then. Just people feel terrible because inflation, they feel like it's going to come even more in 2026, especially in the form of higher healthcare payments and healthcare premiums. They feel like prices have gotten out of control and nobody can control it. So they blame the government and they blame corporations for that. But in reality, if the unemployment rate really is somewhere between 4.4 and 5%, that's still relatively low right now. Wages have been increasing like 3.5 to 4%. That's decent. We are hearing a growing drumbeat about more layoffs, and the AI fears about it taking people's jobs. Those are significant, and just that psychology can weigh in on people. But we continue to spend because that's what we're really good at as consumers. And as long as we're doing that, and you have all these multi-trillion-dollar companies pledging to spend tens, hundreds of billions of dollars with each other, that's driving the other part of the economy. Economic growth is going to be there. Economic growth is going to be there with lower interest rates next year. And we're going to hear that on Wednesday when the Fed comes out with its decision, which will probably lower rates by 1/4 point, but it'll signal through the dot plot. It's sort of summary of where Fed governors think interest rates should be a year from now, that they're going to be probably a full percentage point lower 1 year from now. So this combination of lower interest rates and the economy not falling off a cliff and tariffs being more smoke than fire really at this point in time, and corporate profits are growing. All these things signal the fact that the economy is probably going to grow and might be actually okay, although people on the low end of things are not going to feel it, and they never do. They're just going to feel worse as the investing class does even better.
I saw you on your skateboard today talking about the Fed dot plot. I appreciate that content.
Right.
So there was a report today over the weekend where they were talking about the Mag 7 and how it's had this amazing run, and at some point the reality check is going to happen. And some analysts are saying it'll happen in 2026.
Yep.
Those same analysts were saying that the S&P is going to have a great year next year. I find it kind of hard to figure out, though, how the two things are going to work, right? If the Mag 7, you're talking about some of the biggest companies, these big hyperscalers, I think they make up 35 to 36% of the S&P. So if those don't do well, how do we see with the rest of the S&P picking up that lift and saying, all right, we'll carry the market from here? What are your thoughts on this?
Yeah, great question. And you guys know this well. If you look at the S&P 500 versus the equal weight S&P 500, remember the S&P 500 is market weighted. The biggest stocks weigh the most and account for the biggest part of the index, like Nvidia, Microsoft, Meta, Amazon, Apple, you name it. But if you just take it equal weight, it is underperforming the S&P 500 by a fair amount, by about 10% this year. But what we've seen lately, guys, which is I find very interesting, after that 5% pullback a few weeks ago, which seems like forever ago now, the market rebounded almost to where it was. We're about 1% away from all-time highs. And in that rebound, we saw what the technical analysis like to call breadth thrusts. Sounds like a fencing term, but what it really is a majority of stocks rallying at the same time, right? And that's what you want to see in a healthy bull market. You want to see a lot of stocks rallying, not just 10 stocks, 20 stocks rallying to make the market make new highs. And that's really what it was with all these big mega cap tech stocks and AI stocks. Now you're seeing better breadth, and you're seeing better breadth in sectors that actually matter. You're starting to see a little bit in commodities because interest rates are cooling out a little bit on the short term. You're starting to see it in healthcare, which we haven't seen in a long time. You're starting to see it in financials because lower rates are coming. That's going to be good for them in terms of their net interest margins. So you're seeing broader participation in the market, and that's a healthy sign of a bull market in its fourth year. And this bull's getting a little bit tired. That said, we're going into a midterm election year. Those are always a little volatile, but the trend is up and to the right, especially with lower interest rates on the horizon. That powers small to mid cap stocks and sectors outside of mega cap tech. That's actually good news for momentum. I'm not saying we're going to get another 18, 19% year. Probably we'll get a normal year unless something terrible happens.
To follow up on Troy's question, do you think we have a reformulation of the Mag 7? Well, do you think it'll be a consolidation into 5, or do you think they'll keep the Mag 7 and just change the weighting and the structure of it?
I think just by the nature of investor preference, it'll change. As you know, you've seen investors, especially big investors like Berkshire Hathaway and others, pulling bigger stocks like Apple. But the leadership is still the leadership and the biggest stocks in the index right now. So Mag 7. I think that was Kramer who came up with that term along with Fang to come up with a name for that. It's really been, as you guys know, more like a dozen stocks, and you named a few that were a real part of the rally, the Oracles of the world, the Salesforces of the world. They were a big part of that rally as well. Anybody that was tied to the AI build out and has a big market cap was useful and helpful in bringing the market to record highs 18 times already so far this year. But you'll get a broadening out of participation. You're seeing stocks making record highs. You're seeing the banks start to roll back into record highs. The JP Morgans and Goldmans, those were dancing on record highs. So when you see financials doing well and you start to see other sectors rallying along with it outside of tech, that's a good sign. So you'll always have leadership, but we'll come up with a new name in the next year or two for whatever next group of stocks outperforms the rest of them.
Yeah, we got to figure out how to get Broadcom and TSM inside there.
Yeah, Broadcom has been an outstanding stock.
Yeah.
Also, Walmart too. Can I do a follow up real quick, Rashad? The stock is valued at 40 times earnings. I think the stock is up 25% this year. Why do you think Walmart doesn't get the same respect that Amazon may receive, even though if you look going back to 2018, it was priced at $28.10. It's currently at $113.56. Yeah. Despite classification of where they land, why do you think that they aren't put in that Mag 7 or Elite 8 type of range?
Well, did you notice what just happened in the last couple of weeks? What happened with Walmart? What exchange did it move to?
That's a great
it
point.
Moved to the NASDAQ.
Great point.
Right? It's been on the New York Stock Exchange forever.
Yeah.
Right. And it decided that it needed to be listed on a different exchange, the NASDAQ. Now, why the NASDAQ? Right? That's where the fastest growth stocks in the world live. That's where growth stocks, that's it. That's where you list. And so it wanted to be included in those conversations. So you're not the only one that noticed it, and they noticed it themselves. They are much more than the biggest retailer in the world, and they are that. But they are a logistics company, right? They're a data company, right? That is what they're into these days. And I was just out in Bentonville for the first time. If you guys haven't been out there, first of all, we should go out there and do a Market Mondays out there. There is nothing. It is outstanding. It blew my mind being in that town. And you see the history of Walmart, which is really the history of America, and just all over the place, and the infrastructure that's around the Walmart supercenters there. It's phenomenal. So it wants to be a tech company. It wants to be thought of as a growth company. And so it changed where it was listed. And maybe it will get that respect because now you got to include it in the QQQs of the world, right? You got to include it with growth stocks indexes, and portfolio managers that own those sectors are going to have to buy it if they don't own it already. And it's actually outperformed. I was checking this out. It's outperformed the NASDAQ over the past 5 years. So it definitely belongs in that exchange, and maybe it'll get the respect that it deserves.
What opportunities do you see in 2026?
Well, I think the sector rotation is helpful and good. We have all been piled into the same group of stocks forever, and it's been great. It's been very rewarding for shareholders, right? If you picked the 5, 10 fastest growing stocks in the market, especially in tech, especially in internet and communications and AI, you have had an incredible run as a shareholder. And no surprise that we have more 401k millionaires than any time in history. We've all been piled into the same stocks, but when everyone's piled into that side of the boat, you can see what happens. We saw, the NVIDIAs of the world, the Oracles of the world, the Microsofts and Metas, these were down beyond correction territory. They're almost down in bear market territory. So you've had a healthy valuation resizing there, which is good. But in a lot of ways, they've become value stocks or safety stocks, right? It's either gold or that, right? And it all depends on the equity risk premium for investors right now. So I think you're going to see a rotation into a little bit more defensive, but also a little bit more broadening into the healthcare sector, as I mentioned earlier. Biotech finally caught a bid, and then smaller down the market value chain as you get into the mid caps and the small caps that are going to benefit from lower interest rates. There's a lot of good companies there that are doing business in a way that's not necessarily tariff sensitive, that are operating great businesses. So I watch mid caps. You can buy the mid cap ETFs if you want, or you can buy the small cap ETFs to get some exposure.
Can you explain, because some people might not be familiar from your website, can you explain the difference when you say mid cap, small cap?
Oh, sure.
Large cap?
Yeah. Small cap stocks, we're talking like 5 billion to 10 to 15, 20 billion in market cap, right? And market cap means the stock price times the amount of shares outstanding. The more shares outstanding, the bigger your stock price, the higher your market cap. NVIDIA, obviously the biggest of the companies in the world in terms of market cap. Mid caps are more in that 25, I would say, $200 billion market cap range. And these are manufacturing companies. These are financial services companies. Some of these are even tech companies or working on the fringes of AI or on the fringes of semiconductors. And they have fabulous businesses that are super profitable. And right now, you want to have very strong profit margins if you are a publicly traded company. This matters more than anything. Revenue per employee. How much productivity are you squeezing out of your labor force? How are you using AI to do that? And how is that powering your profit margins and your profits? Because at the end of the day, as investors, that's what we're paying for. Grow your profits because it's going to be reflected in your share price and in the dividends you pay back to investors. So in that mid-cap range, they're going to benefit from lower interest rates because these companies borrow a lot of money. And as rates go down and they refinance their debt, that eases the stress on their balance sheets and they're more profitable. And that's usually a benefit to shareholders. So I would look down the chain a little bit as well.
And then large cap. Did you talk about large cap?
Yeah, large cap are the biggest companies in the world, the 200 billion to now 5 trillion.
Mega cap.
Oh, those are mega caps. Those are the 1 trillion to 5 trillion. Large cap would be the 200 billion to $1 trillion in market cap now. But those ranges have expanded over time because we live in the land of the giants.
You had to update Investopedia because we didn't have $1 trillion company until like recently.
You're right. I'll get right on that.
I want it because you sit in a unique seat, and we're trending toward the end of the year. I wonder from a retail investor side, what are you seeing in people searching? Like, what are the things that people are looking into? I know there's a lot of talk of recession and what the future is going to look like. Bitcoin. What are those trends that you're seeing from the Investopedia side that retail investors or any investor really is looking forward to on your site?
Yeah, we love it because we got 14 million unique visitors pouring in every which way into our site all month long, and they're all asking unique questions. Now, some of it is news sensitive. Obviously tariffs was a big deal this year, but we're going to come out with our terms of the year next week. I'm going to give you guys a sneak peek because I got nothing but love for EYL and Market Mondays. But number one on that list is going to be affordability, which is the hot button of the year if there ever was one. Now, tariffs, obviously, but tariffs weighs in to the affordability issue. But we've also seen a ton of interest by folks in things like insider trading. Which when you think about a lot of the deal making that's gone on, not just with this administration, but in past administrations as well, when you think about Congress people and their trades, that gets under people's skin a lot and they want to know what's going on. People have been fascinated with stablecoins this year because of the Genius Act and the Stablecoin Act, and they want to know what that actually means. And then, people are constantly fascinated with Bitcoin and its fantastic volatility. It's in another one of its famous drawdowns. So people have been looking into those terms as well. But when you think about the way that people operate, when they want to learn something first and then take action or see how it's going to affect them. So for the first 6 months of the year, it was all about tariffs and the Smoot-Hawley tariff and how's that going to impact my 401k. And then people go from that to what are the safest places I can put my money right now and still generate a return. We went from a very high sort of risk-on mentality at the beginning of the year with the market screaming to some pretty good gains, tariff scares in April, and that really scared people into safety assets. So the searches around gold and silver were extreme. And then you have those people that like to live on the edge that are looking ways to play these moves in the market through inverse ETFs, through the options market. And now, guys, this slamming together of probability betting, right? Sports betting, crypto trading, options trading, predictive markets, and the tokenization of everything, so that we're going to this 24/6 trading model where you can just buy a token of Amazon.com stock and trade that throughout the night, and then the stock market opens at 9:30 and Amazon stock starts trading. That's going to create a lot of price disturbances in the market. So people are looking into all of these terms. Sports betting was very popular on Investopedia this year, but so are the predictive markets.
Do you think the rise in popularity of prediction markets, sports wagering, is because of inflation and affordability? Or do you think that once investors got a taste of higher than 10 to 12% gains, they're trying to recreate that momentum from the COVID era?
Yeah, I think it's a lot of that. The gamification of trying to make money, and the fact that people are realizing, we talk about this. I was on with you guys talking about the price of the American dream, which we priced out this year at $5 million. People look at that number. If you're young, you're like, never. I can't even imagine getting there. So how am I going to do it? What's going to be my way of doing it? The Wall Street Journal had a story today, I believe, about young men getting back into crypto because they think that is going to fuel their retirement. It might, if you do it wisely, but so I think it's that desperation. Also just social media and watching people gamble on TikTok constantly all the time, and sports betting has had such a big influence right now, and all these platforms that are getting together. ICE, the company that owns the New York Stock Exchange, put a couple billion into poly markets. CME, the options trading house out of Chicago, has a deal with FanDuel right now. So they all want to get into business with each other because they're trying to capture that betting gamification mentality. And for if that brings people into the market and turns them into long-term investors, hallelujah. We just all know, the four of us, doesn't always play out that way.
So let me ask you this: as far as let's shake the room. You have an interesting perspective from where you sit, because you're looking at it from like the mountaintop, as far as Investopedia and analyzing so much data, and then living in New York and having that vantage point as far as the financial markets. Okay, you said something about $5 million being the new American dream. Let's just go through a few different things right now. What is middle class? How much money do you need to be middle class in the tri-state area?
It's a great question.
Yeah, it's a great question. I think you need a dual income of 250 grand, at least, to be even sort of scratching that surface, if you can, or at least a household income near that, because everything else, when you think about home affordability, it's at an all-time low, especially around here, and the rising price of just about everything else. So, you can get by. It depends on how you live, of course, but if you want to supply your family with good health care, right? You want to be able to send reasonable expectations, send your kids to school. It doesn't have to be an Ivy League school, but even a state school, a couple, 20 grand, 15 grand a year, potentially. If you want to be able to take a vacation, be able to own a home potentially, and raise your family in it, all of these things add up to that kind of a number over the course of a year. And especially when you think about the taxes, right?
And housing.
Right. I mean, the housing cost alone, that's going to be at 250. That's at least half of your nut right there. So half of your money going into housing one way or the other, that doesn't leave a lot for everything else. So that middle class number has gone up a lot. There's been a very provocative article by an economist recently talking about the poverty level being raised to 150,000.
Let's talk about this. Let's go viral. So you're saying $250,000 is minimum
in
for
New
middle
York
class. So that means if you make less than $250,000, what are you?
Yeah, well, you're striving to get to be able to afford what is reasonable expectations for a family. We're talking about wants. We're not necessarily talking about needs. Can you raise a family on less? Absolutely, and millions of people are doing it. But to be able to have those basic wants, and again, I'm not talking about anything crazy. We surveyed our readers. These are things that everybody thinks are reasonable: an annual vacation, maybe having a pet, buying a new car every 10 years or so, being able to raise a family in a house that has a couple of bedrooms, maybe 2 or 3 bedrooms in a safe neighborhood, and take care of your family's healthcare. That's kind of what it's going to cost you. And that feels like middle class, reasonable expectations. So if you're not making that, you are coming up against a paycheck to paycheck, on the verge of a financial emergency really setting you back type of a situation. I'm not saying you're low class. I'm just saying that threshold for middle class, especially given taxes and housing costs and healthcare costs, that means you're going to have to earn that type of money to make it work at that type of lifestyle.
140 poverty line is crazy.
Can I read a stat really quick? I pulled up on ChatGPT. 100,000 in 1980 will be the equivalent to 380,000 to 400,000 today. If we go out to 2035, you'll need 500,000 to 510,000 to keep up with inflation. That's insane.
It's insane. It's insane. Now, families make it work. People are creative. We know lots of people that are never going to make that amount of money that are still raising their families and doing all the things I described because people are creative about how they do things. But just think about, just the rising costs over the past 5 years.
Mhm.
And then if you were trying to start out right now in New York City or in the
Oh, my
tri-state
God.
area as a young professional, how much that would actually cost you, how much you would need to make to have just, a reasonable expectation of a nice lifestyle.
Something happened today, Caleb, and I'm glad that you came on tonight. I'm gonna go geopolitical here. The U.S. opened up exports for NVIDIA to sell the H200 chip to China. I wonder what your thoughts are on it, right? Because the first part is yes, the U.S. has to okay it. The second part is that China has to say yes, we want you to sell it. We don't know where that's gonna stand. The other part is it too late, right? Like, is the H20? We're already 2 cycles now since then. Is it too late for us to try to get this demographic of revenue back, or are we in the right space, right? Because there was some talks that yes, when you talk about AI and you're talking about Huawei, where they're at in development, it's still they said about 2 years behind where the H200 is. Meanwhile, the H200 is 2 years behind where Ruben's going to be. What are your stance on it? What do you think about the move?
Isn't it fascinating what we're talking about here? Semiconductors really as the arms race of the 21st century, and that's what it is. And it is an all-out arms race. So if you talk to any of these superscalers, it is win at all costs, right? There is no second or third place here. So I think even though those chips may be a little bit delayed and sales into China have been delayed, and that's all part of this whole tariff negotiation, by the way, that is right in the middle of it. NVIDIA's chips are right in the middle of this, along with Argentina's soy, by the way. They're right in the middle of all this. So not too late, but you have to also wonder why that is happening now, right? What is the next shoe to drop right after that? And it's going to be, some reduction in tariffs between the U.S. and China and the retaliatory tariffs, and we're going to back off of that. And there's going to be meetings again until something else flares up, and then all of a sudden those chips are going to be taken off the table. We've seen this kind of a cat and mouse game, but in terms of development, NVIDIA is still the #1 dominant market share leader, 80% market share. You talk about monopoly. You talk about dominant market share, 80% market share in those high-end chips for AI centers right now in data warehouses. And the demand is insatiable, and China is building these out as fast as humanly possible. They're going to need every chip they can get their hands on. That's why this is in the mix right now. But if negotiations turn south again between the U.S. and China, you're going to see that deal probably taken off the table.
Can you talk to us about the downside risk of selling our intellectual property or chips to China in the midst of the BRICS versus U.S. and EU war, and why that could be a negative thing for us?
Yeah, I mean, basically we've lost control of our data completely anyway. But this just makes it worse, and this just is exactly why we had the tariffs and the Treasury Department not allowing the sale of Huawei components into the U.S. because they were allegedly stealing our intellectual property as well. If we think that this is somehow going to protect our intellectual property, then we're completely blind to the fact that it's already out there. But who has actual control over it and what they can do matters. And it matters when it comes to things like banking and healthcare, right? The two things that matter the most in terms of our privacy are our healthcare and our financial information. And if that gets exposed, or that is somehow worked into a deal because of the swaps of these assets or the opening up of these markets, what's going to come next, right? There's going to be data breaches. Right? There's going to be emergencies. Cybersecurity is going to become even more important, and we're going to have the next patch to fix the next problem. And that has been a great sector to invest in because of situations like this. And I can't see that changing. I see that plus the sale of TikTok assets, all wrapped up into the same combination of vulnerability of our intellectual property, which has become the most valuable asset in the world, and the sale of these chips, which are the transport mechanisms for our intellectual property. I'm scared.
I am as well.
Well, Caleb, I want to thank you for coming. Appreciate you as always.
Of course.
Yeah, you know, it's important information, and you got to tell it like it is, and you definitely do that. So, any last word, and also tell the people about, you know, Investopedia if they're not familiar, and then everything that you got going on, and yeah, let them know anything.
All right, I appreciate you guys. You know I do, and you know we've been doing this for a while, and I'm so glad that we became friends over the years. So thank you so much for including me and the EYL fam and the people that I get to meet at InvestFest and everywhere I go with you guys. It really is one of the proudest things in my career. So I appreciate you. I know you know that, but I want to tell you and tell all the people tuning in right now, get your merch, because this is where it's at right now. You know, Investopedia has been around for 26 years, and that is like 260 real years when you think about internet years. And we're still here, despite the fact that you could look a lot of things up on ChatGPT or pick your you know, your AI tool to do it. There's something about authenticity and brand and expertise that I hope that people still recognize. And I think that they do, given how big that we are and how many people are always giving me love. So we appreciate that. And we are, you know, real content made by real people, real editors, real financial experts. And yeah, we got to update things from time to time because we've got 40,000 pieces of content on the site, but we're a free resource for financial literacy, for financial education, for investing education, for all questions money. If you can't find it on Investopedia, you DM me and I'll get you the answer you need. We'll make sure we update the site. But we have big plans for 2026 when it comes to making sure our content is there for people right now, especially with all these other potential distractions, and making sure we have the authentic content, but also doing more in-person events like, you know, joining you guys, which is always so awesome, and doing events across our parent company, People Inc., which owns great brands like Food and Wine, Travel and Leisure, In Style, Real Simple, Better Homes and Gardens. We're a proud part of that family. So you're going to see me doing a lot more with them as the chief business editor for People Inc., telling the business story of just about everything. And we'll mix that in with what we do here at Investopedia. So it's always a delight to be with you. Please follow us at Investopedia. You can find me at Caleb Silver. And, you know, I love you guys. It's always good to spend time with you.
Love you too.
Are you going to use AI? Because you said something that you said you have real editors that actually write.
Mm-hmm.
Is that something that's sustainable long term?
Yeah, and the way we will use AI is what I think is the way that I think should be used for a site like ours. Think about what I said: 40,000 plus pieces of content. There's like 6 million words on Investopedia, but a lot of the same types of questions coming into the site all the time. That's what, you know, we were built by that, built for search. So we still have a lot of that data. But when you, Troy, if you or Rashawn, if you come to our site and you say, what's the best way for me to invest $10,000 right now? And I ask that question, I better get a different answer than the one we're giving you. You're young, you got your whole investing future ahead of you. You know, I'm in my mid-50s and I'm in a different part of my career. We all have different situations. So we're going to start to use tools like that and learn language models through our own content and what we're doing here at People Inc. to give you the best answer we can possibly give you. That is a little bit more personalized. That's more tailored to you. That's a good use of AI for us. We're never going to use it to write articles. We're never going to use it to edit articles, but we do it for things like to find out what's going on. Here's a great example of how our research team uses it. There's how many finance podcasts out there? 10,000. I have one of them. You guys have a terrific one, right? We want to know what people are talking about, but we're not going to go listen to all of them. Now I'll listen to this one, maybe my own, but we'll have AI do it and say, give us the top 10 themes every morning of what people are talking about on podcasts. Great way to start research to think about what to write for news that day. Similarly, we'll use it to scrape a bunch of content that has lists of, you know, best performing ETFs or best performing this or that over time to make sure we're up to date. That's just research tools using it. But ultimately, we want to get readers the best answer for them. And the best answer for them has to be nuanced and personalized in a way that we can actually help create using our own content and our own learned language models. And that's how you'll see us probably using it, never using it to, you know, write a bunch of definitions, because we've already done that and AI scrapes us anyway for that.
Appreciate you, my brother.
Appreciate
Yes,
your
very
service.
handsome. Thank you,
Caleb,
my
as
brother.
always, man.
Thank
One
you
of my
guys.
favorite people on earth, man.
Caleb, I
See
got
you
acting
soon.
sawfish for you when you're ready, man.
All right. You know I'm ready. You know I'm ready. Good to be with you. Love you guys. Talk to
All
you
right,
soon.
man. Happy holidays, my guy.
Okay.
Love Caleb, yo. Good person.
Amazing. He's
Yeah.
been amazing from the day we met him.
Yeah.
Yeah, shout out to Caleb, man. 140,000 is poverty line. That's crazy. We're gonna talk
I
about
think he
that.
said you're striving. I think
No,
it was
but 100,
40.
250.
Yeah,
But he said
in the game.
the 140
Striving.
is no poverty line.
No,
I
we're
never-
gonna keep it
No,
real.
he said that there
We're
was a new
underwater.
research. There was a new article that came out that said 140,000 is poverty line. But there's rationale behind that.
Yeah,
though.
yeah.
It's like where you live. But like I said, I think
CPI inflation.
Right?
yeah, tri-state.
Yeah,
I say yeah.
Yeah.
But they printed a map this past weekend, even in places like Indiana, numbers 133. That's insane. That is absolutely insane.
Man.
Invest or die.
Invest
Keep
or die.
saying this every week. Like it's not even optional even more anymore.
That was part of the conversation. We heard Elon Musk say that Vlad had mentioned it first, and Vlad Tenev, I'm speaking of, had mentioned it as well. And I kind of wanted to know like what he thought about it, because it felt like it was aligned and everything pointed to investing. And he was flat out and said, look, if you don't invest, I don't know what you're gonna do. You have to. Not an option. And so like when we say invest or die, like, yeah, no, that's serious.
And inflation is not, they're not putting that cat back in the bag. It's a combination of factors, BlackRock bond up home, all that, but inflation is not going to come down anytime soon.
Well, the good thing about it is not to be a gloomsday situation, because in the United States of America, there's 1,000 millionaires made every day of the year, 1,038 to be exact. Every single day of the year, 1,038 millionaires are made in America. So you always got an opportunity in America to get to that next level. If you really think about it, that's a lot. 1,000 millionaires every single day.
It's promising.
So if you really focus, and I hate to be that guy, the motivational speaker guy, but I mean it's true. Sometimes in life you gotta sacrifice and
avoid lifestyle creep.
Take some years off, and have some level of pain. But there's a lot of negative things we can say about America. But one positive thing that we can say about America is that you can make it in America financially. You could become a millionaire in America, and there's 1,000 people every single day that become a millionaire.
Choose wisely.
Thank you for the positivity in my doom.
Will it be you? Will it be you tomorrow?
Well, you're already making the first step if you're watching Market Mondays.
That's a fact.
True indeed.
There's millionaires that have been made watching this show. They walk
Absolutely.
up to the phone. I think that's the most flattering compliment that we can get is, look, man, look at my brokerage account. I'm a millionaire. I'm just like, wow. Growing up, we come from the same community. I didn't know one millionaire. So for somebody to walk up to me and say they listen to information that they heard on our show and their lifestyle has changed, their brokerage has changed, their family has changed because of that, it's the most uplifting compliment. It's like, all right, let's keep going. Let's go.
And you could change your situation quickly too. When I say quickly, 5 years, 7 years,
even 3 if you really lock in.
Yeah. I mean,
you stay inside, avoid lifestyle.
Even 10 years, if you really think about it, 10 years in the grand scheme of your life, that's not a long period of time. Like, you could really make a couple decisions, buy some real estate, invest in the right stock, start online. Like you'd be surprised. You can go from barely making it to having $1 million in net worth.
Just execute.
Stay low, keep firing.
Stay low, keep firing.
Stay low, keep firing.
Lifestyle creep. Take 20% of the capital from the business, put it back into the market.
Stay low. Stay low.
Facts. They snubbed y'all at the Streamer Awards. Shout out to the Streamer Awards.
Shout out to Kai. Shout out to who won the joint?
I mean, there was a bunch of
Speed won Streamer of the Year. Yeah.
Speed won Streamer of the Year. I won like seven awards.
Yeah.
Shout out to them, man. They doing their thing.
Well deserved.
Shout out to the Clover Boys.
Mm-hmm.
Shout out to them.
Okay.
Shout out to the Bronx.
All right.
Yeah,
And you got to use it as motivation.
Motivational purposes only.
Only.
Don't use it to get discouraged. Use it as a in order to win the game, you got to know the rules of the game.
Mm-hmm.
So a lot of people that's playing the game without even knowing the rules of the game. That's like saying, okay, if I don't know how many points I'm gonna score, like when I work out, my trainer, he gotta tell me if I'm a bench press, I gotta know whether I'm gonna do 4 sets, 6 sets, 8 sets, 12 sets. You can't just say, okay, just bench press 200 pounds. How many times? Because even if I might only feel like doing it 6 times, but if he tells me 8, now I know that if I do it less than 8, then I've missed the number. If I do it more than 8, then I've actually overachieved that, right? So the first part of actually winning any game is knowing
the rules,
what the game is, what the rules are, with the the numbers that you have to hit. Like you gotta at least know. So now you can say, okay, now I can have a benchmark of where I need to go.
And to tie into the interview this week, for all my entrepreneurs for the next 4 years, find out a way in your business to invest in and find ways to attack markets that are not currently being served. Caleb talked about it, the overcrowded trade. 70% of hedge funds are in the AI trade now. Highest concentration ever. Find a way to rotate to the thing that's going to be next. That's where your breakthrough is going to come from. So
your breakthrough won't come from watching this. I'm gonna be honest with you.
Hello.
I'm just gonna be honest with you. If we look at, and I'm actually gonna do a year in review in the next class. We watched a year in review. It's here.
Insane.
There's so much information. If it's not coming from us, from the people we brought on, for the things that we're exposed to, that we get to share. No, bro, it's here.
We got to execute.
That's it.
Yeah.
Why my man at Berkshire leaving?
Also comes from EY University and Red Panda, making sure you tap in, exclusive learning and in-person masterminds. And everybody take advantage of that. You will be getting correspondence over the next week.
Yep.
Probably next week about NVIDIA trip, in-person mastermind, DC. Man, so much stuff. We got options class coming up in a couple weeks.
Yeah.
We got
cooking.
Open enrollment for EY University.
That's this week.
Red Panda call on Saturday, I believe.
Sunday
at 9.
Yep.
It's a lot going on these days, man. But man, I'm proud of everybody that's watching the show, because you're taking your education serious in a time where, so much has been said about the Diddy documentary. It says a lot about the times that we're in, when that documentary is #1 in 50 countries across the world. What you pay attention to is going to determine your future. So, so much things that you can focus on that will actually better your situation. And the vast majority of the people choose to focus on things that, although they may be entertaining, they have no value to your life.
Zero.
And it's a good lesson too, from a karmic standpoint. You got to be careful when you throwing rocks in that glass house.
Yeah.
Got to be careful. But fellas, move wisely.
Please.
At all times. Anything we want to talk about?
I just real quick, big, like I said, Catalyst events. We got Fed decision on Wednesday, Oracle reports on Wednesday, Broadcom reports on Thursday. So make sure that y'all tapped in to that. And then Micron. I always talk about Micron. They're gonna be reporting next week. And so I like old Micron. You already know I love, and Broadcom for sure. But circle those down if you're not in the know. Pay attention to those.
DoorDash director Alfred Lin bought $100 million worth of DoorDash. DoorDash is now Uber. I want to say that again. Target is testing new fulfillment options for delivery orders online. Target board, find somebody black to be a CEO and find a way to get back. You can do all this AI inclusion bullshit that you want to do, but you better call Dr. King, Reverend Jesse Jackson.
Well, they called magic.
They did.
You got to call all the black Avengers together, and then the whole black congregation of all people, and say that, look, I'm sorry, we're going to do better. This workaround that you're trying to do, your stock is going to remain in free fall. Sometimes you just have to apologize and say, you know what? I'm so sorry. Lo siento. It's over with.
And they're gonna get mad. They're gonna get mad if they do that.
Did y'all see the Waymo hit 450,000 weekly riders? We were talking about autonomous. This is when you start to see those numbers start to tick up. Waymo, which is owned by Chat, owned by Google. Interesting, right? So they're outpacing anybody in autonomous already. Be mindful of that. 450,000 weekly riders, and they're only in like 6 different cities right now. That's going to increase in 2026 and 2027 for sure. Be mindful of how that compute works. Obviously, Google is a beneficiary of that, who they partner with. We talked about Uber. Start putting those dots together.
Any questions? Put in questions for the last couple of minutes if you got questions. Ian, talk about the trading tournament. And somebody had asked the question. They said, any tips for the tournament?
I gave my tips last night on a stock club call, but I will say this: select your target that you're going to trade consistently. Do not deviate from it. The trading tournament, for your chance to win 50,000, you have to be in this week's tournament. Link is in my bio. If you go to Instagram, click the link in my bio. You can register. It is absolutely free. The top 25 people will be able to go to the next round starting next week, and the winner will win 50 grand. But most important thing in any tournament or trading is to focus on your lane, run your race, and don't deviate. And I know it's not the answer you want, because you're like, well, what's the point total? 80% of people are going to lose by overtrading. I guarantee it, because everyone wants to front run to brag. The person who's most dangerous in life, and dangerous in my opinion, is a person who can win, stack up the money, and never say a word about it. That's why Troy says stay low, keep firing. When you want to get online to brag, God's going to say, okay, now you're showing off. Now you're going to have a $15,000 loss. Take your trade, get your coin, stay out the way. And if you can mount these wins 4 or 5 days in a row, you'll be A-okay.
Yeah. We had in our notes that IBM acquired Confluent for $11 billion.
Yeah, for $11 billion. Yep.
I think those type of acquisitions, mergers and acquisitions, are important, but they're very interesting. I think what it really talks about is time, in a sense that especially some of these large companies are looking at the time it's going to take to try to develop it for themselves and realize they don't have that amount of time. And so the fastest way to get it is figure out who's doing it, because we need to acquire them, right? Rather than saying, let us build it out. And we've seen that, which is why when you talk about a Meta or an Apple who's saying like, we'll build our own chip, but in the meantime, we need to figure out who we're going to use, right? Because that's going to take time. You're going to start seeing a lot more of that, especially in the AI space. Is like, we don't have the time to do it.
You don't have the time.
Let's figure out how we can acquire.
The time decay on missing out on this investment. That's why I don't get the criticism of Meta. Man, talk about legacy companies having to adjust. IBM has done an incredible job since 2020. Finding a way to claw through this publicly traded market. 2020, they were at like 102 or not. They got down to 92. They're currently at 309. Great job. Amazing job to figure a way to claw back.
It's almost like plug and play. What piece do we need to make this complete, or what piece are we missing in this structure? How can we add it? That company does that. Let's figure out how we can add that to our puzzle.
Justin said, what do you think about Republican Robinhood's tokenization of private company shares? We actually talked about that on the episode with Vlad this Thursday, but it's definitely going to be a game changer if it reaches, mass adoption. If it reaches scale, if it definitely scales, then that's going to be an opportunity that's going to be able to change people's lives. If it can actually get, mass adoption, scale, and be able to take off the way that hopefully it can take off, because public markets is one thing, but the money that you make on the private side is never going to be the same as if you make it on the public side. So
we just saw that with was it SpaceX? Which company did Elon? The new valuation is 800 billion.
Well, before we go back,
let me just finish that thought, because when you talk, I actually got a text about, hey, I was in that when it was 100 billion, and now we just 8x our money. And that was just like a 2-year investment. And so inside this is the type of access that something like that will give to the average person, right? Like, how would you even know? Like, you'd have to be inside of a circle that actually knows somebody
Or
that can
know
get you-
somebody, on the private equity side.
and it doesn't really even, it doesn't happen. Like, you're just not going to walk into these people. But this now opens up that playing field to give
we
access.
said this, the greatest story ever is Peter Thiel.
Mhm.
We said that 2 weeks ago. He turned $1,400 to $50 billion.
Yeah.
And I want to be very clear. If Robinhood finds a way to democratize investing into private companies, that stock will be $600-700 in 4 years.
Yeah, for sure. So
Yeah, SpaceX valuation.
So I mean, CoreWeave is CoreWeave clawback.
All right.
Let's be honest. Nope.
No. Hold on, because
nope.
One of the things we had was if tech companies are at risk for bailouts due to failed AI investments, what are some of those companies? And I put an asterisk next to CoreWeave only because of the debt structure that they have. Their guiding light is that NVIDIA is an owner and has taken ownership inside them. But again, their structure, you're taking on depreciating assets in terms of GPUs. So every time that you need to lease them, it's always going to be an older model. And the amount that you're paying for the infrastructure to build out data, it has to go perfect.
Stepped on chip play.
It has to go perfect, right? And that's if NVIDIA is the choice, right? Is that long-term, how long will the dominance happen? Is it a 20-year dominance before everybody decides that they're making their own? We don't know, right?
Before every company decides to make their own chips?
Yeah.
Yeah.
No, man, how long will NVIDIA's dominance be right now?
Oh, got you. Okay.
Right. And so you're reliant on another company for your revenue in a sense. And that always feels tricky to me. I still like it. I just think there's some holes in it.
Is it B tier or C tier?
I got it at probably a C. I probably got it at a C.
Yeah,
I probably got it at a C.
I agree.
Probably got to see it. But there's some other ones. I thought when you talked about Duolingo, I would put them in that category. C3 AI, I would put in that category. SoundHound AI, Big Bear, all those companies that the debt structure is relying on if this AI system, and they all do different things, obviously, inside AI, but it's heavily contingent.
Yeah, for sure. Thanksgiving, we will be in DC on Friday.
Yeah.
To speak at the Thanksgiving conference. Shout out to DC. We'll be there Friday. Get your tickets. Somebody asked about UI University. Yes, options class will be coming in 2 weeks, but you can download the app if you're in UI University and watch previous videos. And in the community, there's people that talk about different stuff, trades, when options, and all day.
Yeah. Go check it out. I just put a new one in on Friday.
Download the app, EYL University app, and go to the orientation to this week. That's going to go over how to navigate the app, all of the clubs, all of the education that's available inside of EY University.
Yeah. So go inside the community, and people always ask, where do you find it? Inside the community, I'll usually post inside there. And if you look at the post I just put up about Micron, there's some great, I love the questions that come from it, because it's like now we can get into a little bit deeper talk, and you can start seeing how the dots are starting to get connected. And so there was a great question about Micron in terms of memory and how they were leaving the memory sector. And it was a great place for me to say, oh, great question. I see how you're thinking, but here's actually what's happening. And then it peels the layers onto why I'm looking at another company. So definitely take advantage of that.
In this AI race, which company is uninvestable for the next 2 or 3 years? Last question before we wrap up.
Who's watching? Which one is uninvestable?
Who do you think?
I wouldn't say that they're uninvestable, but I wouldn't deploy any money into Salesforce. I think they're too far behind in the race. I think Salesforce would be a tech value stock going forward, but I'm not saying it's uninvestable.
That's tough. I'll say,
and for the person who asked about UPS, there's other places you can deploy way more capital. And
it's uninvestable in the sense that it's a private company. So I'll take anyone that's private. Gronk, OpenAI, those companies from a public.
You smart as hell. Oh my God. I was like, wait.
They're privately traded. So until
well
they're
played.
Traded,
until Vlad.
Yeah. We'll see.
All right, y'all. It's been real. Tap in. Blackout on Wednesday at 10 o'clock. Earn your
Who will
leisure.
get in trouble this week?
Never know. Earn your leisure 6 o'clock on Thursday, Vlad Tenev. And yeah, that's the deal.
Yeah. Love is love, y'all. Y'all be good. One text, one phone call, hit your people up, show some love. Be good to each other, man. Be good to each other. Love is love. We out. Peace. Go Hoosiers.
Go Hoosiers, yo.